Buying a home isn't just about having a place to live, it's about building the foundation of your financial future. For years, people were told renting is fine, owning is risky. But the truth is the exact opposite. Renting gives you shelter, owning gives you stability, equity, and long term wealth. And here is something most people never realize: every single rent payment you make builds your landlord's financial freedom, not yours. So, step six in your journey to financial freedom is simple. Start building your own wealth, not someone else. And that begins with becoming a homeowner. Let's discuss top 5 reasons why buying a home is financially a game changer. First is appreciation. Your home grows while you sleep. Unlike cars or gadgets, homes tend to increase in value. Historically, real estate grows around 3 to 5% per year. On a 500,000 home, even 3% will give you 15,000 in growth every year. You get the growth automatically just for living there. Second is you build equity instead of losing it. A portion of every mortgage payment reduces your loan. This is forced savings that turns into real net worth. After 10 years, renters walk away with $0. Homeowners often walk away with 150,000 plus in equity. This is why, according to the Federal Reserve, homeowners are 40 times wealthier than renters. Third is your housing costs don't explode every year. Renters face the same problem forever. Landlord raise rent every year. Homeowners with fixed mortgage enjoy predictable payments, stability, and protection from inflation. Even during inflation spikes, your mortgage stays the same while rents skyrocket. Fourth is your gain leverage, the wealth multiplier. This is the part nobody explains. You can control 400,000 home with just 80,000 down. That is 5 times leverage. If the property grows 3%, you earn 12,000 on only 80,000 invested. The stock market cannot give you that kind of safe leverage. Tax benefits and financial freedom is the fifth benefit of owning home. Depending on your country, like in US, the tax benefit and financial protection can include mortgage interest deduction, property tax write-offs, and capital gains exclusion when selling. In Canada, there is no tax on gains for your principal residence after you live there for at least a year or so. This alone can add tens of thousands to your bottom line. Now, what if you are not ready to buy? Most people don't buy homes for three reasons. First, they say, I don't have enough money. That's totally normal. Here are three solutions. First, start with a condo. Second, buy in a cheaper area and rent it out. They say rent where you live, own where you can. And third, use first time homebuyers programs. People think they need to buy the perfect home. What they need is the first home. Second, people say, I don't know which city I want to live in. And that's fine. Rent temporarily, but with intention. Rent for flexibility, not because you are avoiding ownership. When renting, you can still buy an investment property in a stable market and build equity while you explore other cities. Third, people say home prices are too high. People have been saying this since 1995, 2005, 2015, 2025, and every decade, those same people watch prices rise anyway. The secret is this: you don't buy the dream home, you buy the entry home. The dream home comes later. Start small, get in the market, climb the ladder. Buying a home is not about perfection, it's not about timing the market, and it's definitely not about keeping with anyone else. It's about taking control of your financial future. Because renters build someone else's wealth, homeowners build their own. Even if it's small, even if it's not your dream place, your first home is the foundation of real financial freedom. But here is where people get stuck. They buy a home and then they rush to pay it off aggressively, sometimes sacrificing their entire lifestyle just to be mortgage free. In step number 7, I'll show you why paying off your mortgage too early can actually slow down your wealth, and how to create a smarter balance between paying the house down and building your investment portfolio.